Tariff tensions. What do investors really think? Well, some good timing here, Rick. We've got a new survey coming out, the spring 2025 investor sentiment survey. Rick, what are investors thinking heading into this new year?
Well, Jeff, investors are decidedly unenthusiastic about the notion of tariffs, and that's probably not a huge surprise. And they're looking at it from a very, very practical standpoint. About 60% of the people we surveyed are concerned that these tariffs are going to increase the costs they pay for imported goods. And that's not a small consideration. We're talking about lumber being imported from Canada in massive quantities. We're talking about the majority of drywall being imported from China. And so two of the major building components. We're also looking at a lot of flooring that comes in from places like Mexico and China. So the cost component of things really, really big concern among investors. They're also concerned about their ability to continue getting materials that they need and supplies that they need in order to complete construction of homes. About 47% believe that these tariffs may cause supply chain disruptions, either as importers kind of slow down what they're bringing in, or there's some other disruption in the way that goods are imported as we kind of implement these tariffs and figure out exactly how they're all working. And then 40% are concerned that because of all this, they're going to see a reduction in their net margins. And that's true
Mm.
whether the investor is a fix and flip investor, looking at what they're going to be able to capture from profit on the resale of a property, or whether they're a buy and hold investor and will have to amortize those increased costs over a longer period of time. So very, very significant number of investors that participated in our investor sentiment survey are very concerned about the impact tariffs are going to have on their businesses.
And I would think, as an investor, a lot of the disruption and the turmoil is just the psychological impact of not knowing. I mean, this is real. We're only 6 days into this at filming, but we still don't know what the implications are. And as an investor who's trying to plan out my next 6 months, year, 2 years, that not knowing is just as damaging as the actual impact of the tariffs.
Yeah, if you're a fix and flip investor and it takes you on average somewhere between 120 and 150 days to buy, rehab, and sell a property, you really have no idea what market conditions are going to be in 4 or 5 months. And that makes it really difficult to figure out what the correct price point is at which to buy a property and how much it's going to cost to repair the property as goods and service prices both go up. And then, what's the economy going to be like and what are home prices going to look like 4 or 5 months down the road if we do enter into a recession or the economy slows down. So uncertainty really is in many ways the enemy of an investor looking to be able to calculate his or her profit margins 4, 5, 6, 7, 8 months down the road.
So as we look at the spring investor sentiment survey, what sort of comparison do we have with investors in different markets? Are different regions of the country viewing things differently? Are they more optimistic, more pessimistic? Give us a flavor for what's going on across the USA.
Well, the market that really stands out as being particularly more negative than other markets is Florida. And that's probably not a huge shock. There are major issues going on with the condo market in Florida, which has been an area that's been very popular over the years among residential real estate investors. We're seeing home prices go down in some markets, particularly in the Gulf Coast region, the regions that have been hammered by some of the extreme weather events that we've seen there. And we're also seeing rental prices become real challenges in many of the markets. You couple that with soaring insurance premiums and property taxes that have gone up very rapidly because home prices have gone up very rapidly. And it's a tough market for real estate investors right now. Probably not a huge surprise that we're seeing a more negative outlook there than in some other markets. Other than that, Jeff, there are pockets around the country But the most probably the most severe divergence from general sentiment is in the state of Florida. Probably to a certain extent, you're seeing a little bit of that in Louisiana, a little bit in Texas, and then some other one-off markets. But more positivity in the Midwest, more positivity in some of the Eastern Seaboard states, and even some of the markets in the Northeast.
Interesting. So when we think about investors moving forward, and of course the tariffs are a wild card, did the survey sort of give us any looking glass into future investor behavior and how it's going to shake out over the next 6 to 12 months?
Yeah, a couple things. This was the lowest index number we've had in our investor sentiment index, which takes a look at investors' perspectives on the current market, the future market, how many properties they plan to sell, and what they expect home prices to do. So this is our low water mark in about 2 years worth of surveying investors every quarter. It really is very reflective of what we're seeing from home builders and also what we're seeing in terms of consumer sentiment. So investor sentiment seems to be going along very similar path to what we're seeing in other surveys. Um, if you're looking at what we can expect in the coming months, it does look like investors are expecting the cost of financing to start to come down a little bit. They're expecting home price appreciation to slow down. They're largely expecting to sell the same number or fewer properties, or I should say, they're expecting to buy the same number or fewer properties as they did a year ago. So it's not a terribly optimistic outlook, but if you look at that number of what they expect to buy and either sell or rent, it suggests that they're not overly pessimistic either. They're just being cautious about what they're doing with their capital.
Appreciate the update, Rick. Thank you.